Now it's time to bring back in my good friend and co-host, Jeff, as well as our good friend and our next guest, Sam McElroy. Sam is a partner at Stride Financial, a retirement income store located in Chicago, Illinois. Sam, thanks so much for being back on the show.
Absolutely. Thanks for having me.
So what are the biggest questions that you're getting today from your clients, given what happened with the market 6 months ago, what's going on with the markets today? Talk to us about what you're hearing.
Well, I think the biggest question people have is just how to make sense of it. I don't know if I've ever recognized a period in my own life where there's been such a disconnect between, market valuations and just the overall experience in terms of the economy and what the average investor is maybe going through. So the biggest question we're getting is just what should they be doing? A lot of clients have some cash and they're wondering where to deploy it. And I think that that's the question that a lot of people are trying to answer right now is how do you make sense of a world that for a lot of people just is making less and less sense?
So being part of the retirement income store, I know that you're talking to them about going from the G to the I, from growth to income. But you find today that more people are interested in income from contractual investments, bonds and bond-like instruments, or with the market roaring, are they more interested in higher dividend paying common stocks so they can still be in the game, still get a little upside if it keeps going?
Yeah, I think it's a little bit of both. I think that people are more familiar with dividend common stocks, but when you talk to them about the world of income generating strategies that goes beyond just dividend equities, people are very interested in being able to have things that are more contractual in nature also. I think what people really want at the end of the day is the assurance that they're going to be able to live off of the production from the resources that they've accumulated. And so when they see an opportunity to be able to budget the way they would off of a salary by having consistent income being generated, then yes, they can still throw in some of the flavor from having some dividend equities where they can get some of that growth as well. But I'm finding that people don't really want to risk the upside if it means they may blow it and miss the ability to have the income they're looking for retirement.
Yeah, Sam, I'm hearing a lot lately about people calling me up, just clients that already have great income producing portfolios, and they're saying, what's going to be the effect of the election? What's going to be the effect on my money? And is there anything that we should do now? Because there's this perceived notion with Biden wanting to raise taxes. If he raises the corporate rate from 21 to 28, it's going to cause an 8 to 12% reduction in corporate earnings, which of course will affect the market. But what are you hearing the same thing up there in Chicago, in the Chicagoland area? Because I'm hearing that down here in Florida every day.
Yeah, I would say it's a little bit of mixed. Truthfully, I think one of the things that's interesting about this election, and maybe it's true of every election, is just the amount of psychology and emotion that's connected to it. I think that it's more so about the perception of what either administration being in the office may mean. And I don't know if we know specifically right now what impact that may have on the market. It's going to be very divided based off of who you're in favor of. But one of the things I think that's really good about when you invest for income is that even if the market were to fluctuate, even if market values were to change, it's not that that information is irrelevant, but that that's not where the return is really coming from. So to the degree that you can have a contractually obligated cash flow from dividends and interest and other cash distributions, that at least gives you a baseline, even if you have some uncertainty as to what's going to happen with the market value.
Right, either way, bottom line is it's not going to affect your lifestyle. And Jeff, we got to be a little careful with the political questions here because remember, we're on a very conservative network here, and Sam is from Chicago. Okay, so I'm just saying, but we need to leave it there. And
hey,
go to break.
These are all stated facts. This is not the fake news. Okay, Biden's plan is to raise taxes from 21 to 28.
We need to go to break. Will somebody shut up my co-host, please? These sponsors are paying good money for this. We're going to break. We'll be back in a minute more with Jeff Small and Sam McElroy. We'll be right back. Welcome back to the Income Generation. I'm here with two very good friends, of course. Our co-host, Jeff Small, and today's guest, Sam McElroy. So Sam, thanks so much for sticking around.
Absolutely, thanks.
Now, because of all the I heard right before the break some psychobabble from our other studio there with Jeff about fake news or something. So Jeff, since I cut you off the kneecaps for our commercial break, I'm going to hand it right back to you.
Well, Sam brought up some really good points about, who your persuasion is politically and how it's going to affect the markets. But the reality is what we see happening going forward is it's probably going to be relatively benign with our clients, even though there's an incongruity in politics and the markets are obviously incongruent with what's happening with fundamentals, as you had pointed out before, Sam. So all we can really do right now at this stage is be the anchor. But if you're in fixed income investments and you have the right portfolio, it doesn't really matter who gets elected, is what you were saying, Sam, before. Isn't that correct?
Yeah, I'm thinking right now, I have a couple that I'm working with, and they're probably about 7 or 8 years from retirement. And when they first came to us, I remember just the anxiety that they had because they didn't really see a way that they were going to be able to get to where they felt they needed to be. And like many people, they thought that they just had to throw caution to the wind and be as aggressive as possible because they were trying to make up for some lost ground. But when we actually came back and we ran the numbers and we looked at it, you can utilize income as an organic growth model. Just by generating income but reinvesting the income, that over time can actually produce the same effect as market valuations growing or anything like that. And in their case, it actually was enough to get them towards the goals that they need. And they'll already be in a position to naturally transition from going from their employment income to living off of the income produced by their resources. Now, in the same ballpark, it could be that the market has a great 7, 8 year, 10-year run, but we don't know. So when they looked at it, they said, well, why would I bet that everything aligns and everything goes great and the market appreciates when I know that I can take a more contractually guaranteed route and have an organic growth model? So I think that's the level of where income generation can really play, even when you're building towards a goal.
Great points. Couldn't agree with you more. Dave, how do you feel about that?
Well, and I think the other thing too is if you, so I'm going to speak to our viewers now and their beliefs, I think, en masse. So if we did have a Biden presidency and we did see a big jump in corporate tax rates, that should mathematically cause the stock market to go down. And the good news about that, if people are investing in dividends with common stocks, is now if they're at that stage, at transition stage, where they're reinvesting all the dividends, they're actually happy about that because now their dividend reinvestment is buying them more shares. I mean, the same is true when they reinvest in fixed income, but just it a little bit less so because we don't usually see the big drops in fixed income as we can in the stock market. So, Sam, what else are you telling your clients today when they come in and they're maybe nervous about what they see out there? What's your best advice for our viewers, for our listeners?
Yeah, I think what I always go back to is strategy over product. You know what I mean? I think so many times we feel like if we want to reach our financial goals, we have to have the highest rate of return, the best product. But there's a difference between, actual returns and average rates of returns. And what I always tell people is that if you have a good plan and if you have a good strategy, that will always typically be a bigger determining factor on whether or not you achieve your goals than simply if you pick something that's perceived as having a higher rate of return at the moment. So when I'm sitting down and talking to people, what I'm really encouraging them to do is to make sure that they understand first where they are. How much income do they need? How much are they producing? How much risk do they want to take? How much are they in the market right now? And then start to massage the portfolio so that it's in alignment with all the goals that they have and what it is that they're looking to do, and only take risk to the degree that you've already covered the basis. And when you can start to align things fundamentally from that perspective, it can take a lot of the anxiety and worry away and give you a clear path towards success.
45 seconds left, Sam. Is that the single biggest mistake that you find people having, that they don't have that plan? They just kind of look at their investments as a pile of money, and then they get too close to retirement for comfort and go, oh my goodness, what do I do now?
Yeah, I think it's that. And I think it's also a limited understanding of the investment world. I think people's over-reliance on the stock market as if it's the only investment around negates the opportunity for them to have a counterbalance from other asset classes that they really do need to have a well-rounded portfolio.
Mm-hmm. So it's plan and strategy over investment vehicle. I love it. Sam, as usual, some great words of wisdom. Thanks so much for being with us here on The Income Generation again. We appreciate it.
Anytime. Thanks for having me.
Now you stay with us. We'll be back here in a moment, right here on The Income Generation. I'm David Scranton, and we'll be right back.